Hey everyone, welcome back to Corporate Decoder, the place where we dive into the exciting world of corporate filings. Today we are unraveling the mysteries of the Federal Home Loan Bank of Indianapolis, or FHLBI for short. It sounds like a bank, but maybe they just loan out homes, stick around, and we'll figure out what they really do. We're looking at an 8K filing, which is basically a company's way of shouting, hey, something important happened. In the financial world, this one is dated March 24, 2025. The main event, it's all about the FHLBI getting involved in some serious financial obligations, specifically related to bonds. Now, bonds are basically IOUs. When you buy a bond, you're lending money to someone and they promise to pay you back with interest. The Federal Home Loan Bank of Indianapolis is becoming responsible for bonds that the Federal Home Loan Banks, the FHL banks, are issuing. These bonds are called consolidated obligation bonds, and they're like a shared debt between all the FHL banks. This shared debt is due to be paid back in a year or more. Let's jump into the details of these bonds. Okay, here's a quick rundown of some bonds they're dealing with. On March 24, 2025, they made a deal to issue bonds identified with the code 313-130B5PU6. These bonds will officially start on April 9, 2025. The next interest payment is scheduled for October 9, 2025. These bonds can be optionally redeemed by the bank before the due date, with an American redemption style, meaning they can be redeemed continuously after a certain date. The interest rate is fixed at 5.375%, and the total value of these bonds is $20 million. Another similar bond was traded on the same day, March 24, 2025, also with the same code 3130B5PU6, settling on the same day, April 9, 2025, with the same maturity date of April 9, 2025. It shares the same features as the previous one, but the total value of these bonds is $50 million. A third bond traded March 24, 2025, identified with code 313-130B5PW2, will start on March 26, 2030. The next interest payment is on September 26, 2025. These bonds also have the option for early redemption, but this time it's a Bonanza style, meaning they can only be redeemed on specific dates. The interest rate is fixed at 5%, and the total value is $25 million. Now check this out. On March 25, 2013, a deal was made for bonds with the code 3022, starting on March 28, 2026. The next interest payment is set for June 30, 2026. The next interest payment is set for June 30, $200 million. Also on March 25, 2025, bonds with the code 3130B5QF8 were traded, set to start on April 10, 2025, and mature way out on April 10, 2025. The next interest payment is on October 10, 2025. The bonds can be optionally redeemed American style with a fixed interest rate of 5.870%, and the total value is $50 million. One more, on March 25, 2025, a trade was executed for bonds identified as 3130B5QT8, starting on April 3, 2030. The next interest payment is scheduled for October 3, 2025. These bonds also feature optional early redemption, Bermudan style, with a fixed interest rate of 4.850145 and 25. These bonds also feature optional early redemption Bermudan style with a fixed interest rate of 4.850 on also feature the percent and a total value of $15 million. The filing explains the different types of call options. Optional principal redemption bonds, which are also known as caller bonds, give the FHL bank the right to redeem the bonds early, either partially or fully on specific dates. American bonds can be redeemed anytime after the first possible redemption date, all the way until they mature. Constant bonds pay the same interest rate throughout the bond's life. The filing also clarifies that these consolidated obligations, which include bonds and discount notes, are a shared responsibility of all the FHL banks and are not backed by the United States government. It's like saying, we're all in this together, but don't expect Uncle Sam to bail us out. In conclusion, the FHLBI is taking on a lot of debt. The report was signed off by Lorna D. Bachman, Associate Director of Financial Reporting, Aptimau. Let's step back and look at what this all means. The Federal Home Loan Bank of Indianapolis is taking on quite a bit of debt by becoming the primary obliger for these consolidated obligation bonds. This move isn't necessarily alarming, but it definitely warrants a closer look. It's like a homeowner taking out a second mortgage. It could be a smart move to invest in the property and increase its value, or it could be a risky gamble that leads to financial trouble. One thing to keep in mind is that these consolidated obligations are not guaranteed by the US government. While this isn't unusual for these types of financial instruments, it does add an extra layer of risk. It means that if the FHL banks run into financial difficulties, there's no guarantee that the government will step in to save the day. Overall, the FHLBI seems to be making strategic moves to manage its financial obligations. While the increased debt load does come with some risks, it also presents opportunities for growth and investment. Thanks for watching. If you found this decoder ring helpful, please hit the like button, drop a comment, and subscribe for more deep dives into the world of corporate filings. Until next time.